Thank you, Kate and Reed Corporate. It's an absolute pleasure to be here for the 20th Resources Rising Stars Conference. A highlight for me over the last couple of days of the conference has been meeting so many shareholders who've told me how they invested in Pilbara and they've been there for the journey, they've stuck with it when things got tough in March 20 and they've done very well. So for everyone in the audience that are a shareholder of Pilbara, congratulations. And for those who aren't, the theme of my presentation today is that I believe the best is yet to come. While I've only been at Pilbara since February this year, I've been on the journey with Pilbara since 2018 as corporate advisor, and it really has been a roller coaster, as many shareholders will know. We had the lithium winter from the end of 18 to 2020, the end of 2020, the successful acquisition of Altura, and then since then it's been ramp up, consistent production and enjoying the high prices. I'm a huge believer in the lithium market and the sector. I specialised in lithium for the last 6 years at the bank I was at before joining Pilbara, and it's really interesting looking how the market has changed. I go back to 2009, was working on one of the first ever lithium IPOs in 2009, which was the Greenbushes asset. And back then, trying to tell investors or educate investors about EVs, lithium, it was nearly impossible. People just didn't want to know about that back then. And fast forward to today, and you can't go to a cafe not hearing someone talking about an EV they purchased, they've got an order, lithium. So it's fantastic to be on that journey, and I think there's a lot more to come for the sector. So my presentation today, I'm going to cover 3 broad topics. For people that don't know us, I'll give you a snapshot of who Pilbara is, our strategy, and our operating performance. Secondly, I'll cover what I think is the most exciting thing about Pilbara, which is our growth strategy. We're increasing production capacity 70% over the next 2 years. So there's more growth to come. And then thirdly, I'll cover the market. I know it's a huge topic of conversation. I'll offer some observations. So I'll leave you to read the disclaimer at your leisure. And getting on to Pilbara Minerals, we have a Tier 1 asset. We're an ASX 50 company. We're the largest independently owned hard rock lithium company in the world. We've grown our market capitalisation to $14 billion, and over the last year and a bit, we've grown our cash balance to $2.7 billion. Now, all of that's not possible without our amazing team. We have a really strong team on site and supported by our Perth head office, who put in a big effort every single day to deliver the consistent results. In terms of our asset, lots of people say Tier 1. We genuinely believe that ours is a Tier 1 asset. We have 2 plants in operation, 580,000 tonnes of capacity, ramping up to 1 million tonnes, and I'll run you through the 2 expansion projects. We've got a 25-year reserve life, and we're in the best jurisdiction, in my opinion, in the world for mining, shipping out of Port Hedland. Now, one thing I'd like to leave you with today, which I think is really important as you think about it as lithium investing, is lithium is a really hard mineral to concentrate. It's not easy. We've got the scars to prove that it's taken us a long time to sort of perfect our operations, and there's not that many into production. So what that means for the market is there are lots of plans, and I'm sure those projects will come in over time, but it's not easy to ramp up these lithium projects to full production, and I'm not aware of too many that have come on budget, on time. And with our expansions, we're duplicating a lot of what we've got, so we see that as an easier way to do that. I won't dwell on the past, but it is interesting to remember that we've only been in production for a few years. Our first commercial shipment was in 2019, commercial production in 2019. The Altura acquisition in 2021, which gave us a second plant. And since then, we've been really busy forming some joint ventures, ramping up operations, and making a number of final investment decisions for our expansions. Having said all that, there's a lot more to come. Where we are in the market, we're in 8% of the global lithium market, both across hard rock and brine. So we're a material producer, and 13% of the hard rock market. Why is that important? Well, it means that we are actually pretty relevant in the market, and it's allowed us to cement some really strong relationships with some tier one customers, initially in China, who've been very supportive, but more recently in Korea as well through our POSCO joint venture. In terms of our strategy, it's pretty simple really. Our vision is to be the leader in the provision of sustainable battery materials products, and we've got 4 key strategic pillars to do that. Number 1 is delivery. Continue to operate our Pilbara asset, which is generating very high margins and cash flow. Secondly, it's to really achieve the potential of Pilbara. And what I mean by that is that expansion, that 70% expansion that I spoke about, to really make the most of that asset, given it is a tier 1 asset. Thirdly, we're very focused on creating further value along the battery material supply chain, and I'll come back to that, but that involves our POSCO JV, our Calix Midstream project to create a higher value-adding project, and recently we announced that we're looking at some more partnerships with downstream hydroxide to really make the most of our additional tonnes. So I look forward to talking about that. If I could go to the next page, I think the clicker is out of battery. The executive team, we've got there's been a bit of a refresh of the executive team, and Dale Henderson, our MD, joined as MD last year. He'd been at the company a long time. His first engagement, public engagement, was actually at this conference this time last year. So he's been in the role about a year. Alex Eastwood, our Chief Commercial Officer, has been in the company a long time. And then there are 5 new executives to really take the company to the next level of growth, and we're really energised as a team. In terms of our operations, if we move to the next slide. We've achieved consistent production and sales over the last couple of years. You'll see generally there's been a ramp up, and we're ramping up our operations. The grey bar is production, the green bar is sales. And what does that mean for today? Well, for the March quarter, we achieved sales revenue of $1.1 billion at a price of 4,480 per DMT. So we're generating really strong cash flows and sales margins, and that's reflected in our cash balance on the next page. A year ago, just over a year ago, we had $200 million in the bank, and that has grown to $2.7 billion, and that's after paying our maiden fully franked dividend, which was 11 cents per share, or $330 million. So we have the platform that is really generating strong cash flows, and as a management team, we're looking to take that to the next level. Go to the next page, please. Sustainability is important for us. We recently appointed our first Chief Sustainability Officer, and there are a number of initiatives that we're progressing in the sustainability space. We've announced a number of community partnerships with key organisations in our region where we operate, and that's a focus for us, looking after the communities and the people where we operate. Climate change. We have built and we've energised a 6 megawatt solar farm. As we expand our operations, we're looking at more power options, more sustainable power options, and we'll outline that over time. And then finally, we're working through Indigenous engagement with their traditional owners. We do cultural awareness training with the Nyamal people, who are our main traditional owner, to really work with them for our people to understand what it means to them, and we'll continue that. In terms of our growth, I mentioned that's the most exciting part of our business for me. We're at 580,000 tonnes per annum, going to a production capacity of 680,000 tonnes, and then 1 million tonnes. And I'll just give you some pictures of that. If I could go to the next page, please. The P680 expansion project is basically a new crusher, ore sorter and primary rejection, and that's the picture on the left. On the right is the P1000 expansion. Now, what's interesting for that is we're duplicating what we've got. So we see that as a low-risk expansion because we can use the same critical spares, we know it works, and we're just building it again. And that's what the P1000 project's about. In terms of value add, we have a hydroxide joint venture with POSCO. If we can just go to the next page. That's a 43,000 tonne per annum hydroxide joint venture. POSCO is extremely busy at the moment building that. And you can see in the pictures there's some recent pictures of how that's going. That's due to start commissioning from the end of this year, giving us downstream revenue. Now, hydroxide plants take a while to ramp up, so that will ramp up over time, and there's a second train coming on stream next year. But we're working with POSCO, who's focused on that 100%. Our other value-adding product is the Midstream project. That's creating a higher value product at the mine site. And we've got a pilot plant that we're targeting financial investment decision this quarter. It's all about refining upwards, leaving the waste at the mine site, and that generates an overall lower carbon footprint across the lithium supply chain. So we're really excited about that. We've got the licensing for that globally. And if that proves itself up over the next year or so, we'll look to roll that out further because we think that's really game-changing for the industry. Moving into the market, and there's an amazing number of conversations and commentators on the market. And look, 2023 has been softer. The chart there is showing lithium prices over 2023. What Dale spoke about at the March quarterly was a disconnect between China pricing and some of the Asian pricing. Now, the green dotted line is China, and then the grey line is Asian pricing. Now, Dale spoke to some factors around why there was a disconnect and why we've seen China pricing go lower than other Asian markets. Pleasingly, we've seen signs that that's changing. Now, that chart is up to the end of April. That's a monthly average, so it's backward looking. The last few weeks, there's some public indices out there. There's the WIX exchange and a few other public prices from reporting agencies, which are showing that prices are turning. Now, I'm not into crystal ball gazing short term. Most commentators are saying that they think prices will turn this year. But what I am very confident about is the longer term outlook for lithium. And covered on the next page here. We see a really material lithium deficit appearing. So the chart there, the gold line is forecast demand from one of the really well-known lithium commentators, Benchmark Minerals. So that's saying by 2040, the gold line is where they're seeing lithium demand, and then the bars are basically showing forecast mine supply. The light grey bar at the top there is the lowest probability supply. And if you believe that, that is showing that there's between 13 and 21 new Pilbaras needed to fill that deficit. That's a huge amount of lithium deficit, and that leaves us in a very good position as an existing producer with a really strong growth profile to take advantage of that market. So in summary, when we look at Pilbara Minerals, our investment proposition is simple. We're generating really strong cash flow from our Tier 1 asset. We have a defined growth pathway, increasing production capacity by 70%. And then lastly, we're integrating further downstream in the value chain. So when we put that together, we think that makes a really exciting investment proposition, and we think the best is yet to come. Thank you.